Ladies and gentlemen, Gay Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down 0.36% there on the S&P. Nasdaq is green today along with the emerging market. Semiconductor, Dow, small caps, the Russell 2000, transport, and the banks and energy, they're all down about 0.5% on those guys. Biotech down also, same with the healthcare, same. We've got home builders down much more today, 1.6%, along with the utilities and retail. So these guys got hit harder today, it looks like, and some of these guys are about 0.5% down, while the Nasdaq and the emerging market printed green there, slightly green there. Bitcoin is down about 7%. Gold, silver miners did get hit today, down 2% on each of those tickers there. Dollar is up 0.5%. Oil's down 1.2%. Treasury bond down about 1%. VIX popped 10% with equities being down today. Let's do with S&P. Spider 65-minute chart here. So this is where we close on Friday, and it looks like we gapped down here. You can see that I put that little box there annotating that there's a gap, down gap, open today, and there's that little micro term kind of a pivot there, micro to short term pivot, right? Prior support acting as new resistance. So you can see we had 3 hours of a rally right on the short-term moving average. Not to mention we got that gap area. We've been talking about 450 level all last week on these daily update videos, that this is going to be an important level to watch should there be any kind of slide going into this week. We did see that slide today in the first hour, and the second, third, fourth hour we saw a little bit of move. But looks like, let's put that in there. So let's kind of track that. Let's go from all the way from here to here, right? So we can capture that wick here and here. So there was a support, prior support, and once we lost it, it is acting as resistance last 2 hours. Not to mention this down gap still open. So there's a couple things we need to talk about for both bulls and bears. Obviously, right now, the price is sandwiched between the down gap and a up gap, right? That's the down gap, and that's up gap there, right? So you can see this up gap was open back in late September or August, and short-term moving average, that's a double support there today. That's what it kind of looks like it held after one first hour of a downturn. And then after that, you can see in this vicinity, that short-term, micro-term rising pivot looks like acting as a resistance. So this gap for buyers, right? For buyers, this gap must be filled. As long as we have this down gap open, things could get hectic for the buyers. However, what the buyers have done right this morning or today, earlier today, is that they protected this gap area at 450, coinciding with my short-term moving average. You can see that for 3 hours, first hour, second hour, third hour, right? There's a double support there, the short-term moving average and the gap area, right? So it's gonna be the battle of the gaps going into this week. Who's gonna fill the gap first? Obviously, bears, you want to fill this gap as quickly as possible, right? Bulls, you want to fill this gap as quickly as possible, right? So I think it'll be interesting to see how this market is going to behave going into this week. And I think we just entered September trading here. And I think the fate of this market for the month of September would be how this market is going to prepare and react to these two gaps here. So let's zoom out though, because we're just looking at, a couple of weeks of price action. Before we zoom out, we get a better idea. Looking at things more of a midterm. So do we have to give benefit of the doubt to the buyers or sellers as of today? Well, as of today, trend is up. Looking at things more the short to midterm, right? We got that low, we have that higher low, we got the higher high, higher highs. This is overall perspective, that's what I would actually call that correcting through time, right? So you can see, because after the oscillator gets, hits overbought level, after this kind of a bullish runs, you want to see some of these sideways movement so that bulls can rest before they can bring it back up. So I can't dispute the fact that that might be still in the cards, right? Because we want to give benefit of the doubt to the buyers overall. But keep in mind, the best case scenario for the bears at this point is gapping it down, because you need to attack. If you're a bear, I'm talking to bears, if you need to attack fast, because if you hang around too long while both of my short-term moving average is rising, we got this gap open, we're just hanging around above this gap, and my short-term moving average has been acting as support last time. Couple times you can see how those levels became strong support there before a bullish thrust, right? So you don't want to hang around too long, because if you let buyers hang around too long, they will bring it up. So I think what bears need to do, the best case scenario for bears, is gapping it down, turn this into an island top. To do that, you need to gap it below 449.70 or so. Maybe 449.80 is okay. So this gap must be open like this, right? Then this will turn into an island top. If we do see something like that, I think there's a good chance we will come and retest this gap right here, which is currently trading at 447.20 or so. If we see something like that and even feel that gap, I think if we see something like that from the bears, you might, bring fear back into the market, and there might be some panic selling occurring for that day if we do see a gap down. However, I'm just going to say this, you let buyers hang around too long, they will bring it up. We got too many gaps open. Market is still bullish. And so you can't play around too long in this vicinity here. So overall trend is up. We're just kind of hanging around here in the micro to short term. Let's check out the oscillator and see if we can extract any more information. So here's what I see, right? You see that how oscillator came down here. Do you see this here? Right? Oscillator comes down. What happened? Price comes down with it. That's what we call correcting through price. Oscillator comes down. What's happening to the price? Nothing. Price is moving silent. Yes, we do have bearish divergence here. A characteristic of bearish divergence. It's not a real potent bearish divergence because there's a lot of peaks here, but it does have bearish divergence. But you can see how that oscillator is continue to move down, but the price is continue to make equal lows here. So there isn't so much of a selling pressure at this point. What it looks like is correcting through time. Buyers are kind of hanging around before they can bring it back up. This is why I suggest for bears to gap it down. They have to make a move fast, because what if we get to a support too quickly here, somewhere here, right? We're getting close now. That's support. That's support. Keep in mind, this is where we bounced last time. That's a near short-term moving average. You can see short-term moving average. Gap is still open. So if bears don't react quickly, if this thing crosses back up, break above this resistance, and see kind of the move like this, that cross like that, I can see this thing going right back up to 458. So let me kind of, recap everything here. So bears, best case scenario, either gapping it down, turning that into an island top with the best case scenario. Maybe a big, bad, bearish candle. Would that work? That would work. I think, island top would be the better deal. But if you just want to bring it down, like hard, you want to bring it down hard, turn this into like a big red candle, I think that works. Only problem with that is if we see something like that, some of these gap areas are going to get filled or retest, and then you know how bulls bring it right back up. And we've seen that happening right here, right? And we've seen that happening right here, right? And we've seen that happening the gap here, not too much, but we've seen that happening in the past where you see some decline, and then you know we go to certain support levels, and then bulls just bring it up super fast. You can see that V-shaped reversal there. There's a V-shape there. There's a V-shape here. There's a V-shape. There's a V-shape. So you want to see a short-term correction. I think, you know, maybe some big bad bearish candle to scare people off for a day or two, but I don't think that's going to do a lot of damage. Island top potentially could become something more. So obviously I'm a long-term investor, right? So, and obviously I am long in this market. I've been long this entire year. And so I'm not, you know what I'm saying? I want the market to move higher, but I want to be fair in my analysis because fluctuation is part of this market. You must, if you're a long-term investor, if you're a position trader, you like to hold things longer term, you must learn to embrace pullbacks, understand the levels instead of getting too emotional every time there's a little bit of a correction, right? We actually didn't have a real correction this entire year. The entire year, what we saw was these short-term pullbacks and declines, and a lot of people been getting faked out, thinking that's the top. A lot of people missed out huge move. I know a lot of people even last year thought that 2021, we're gonna have a big correction. We haven't gotten one yet. And market actually moved up about 22% year to date, and that's considered a good year, healthy year, strong year. It's just what I see is a lot of people getting kind of caught up in the short-term movement. Let's see how the market plays out tomorrow. I come back for you. We will re-examine, and we'll see. Look at the situation again. We'll go from there. Enjoy your evening. Good luck trading tomorrow.